Alrighty guys, so in today's video we're going to be doing a bit of a market review for the London session and also for the New York AIM session. We'll talk about the different trades that were on offer and I guess the different plays you could have taken. So I know some people on my YouTube channel, you guys trade obviously the New York session. Me personally, I trade the London session, but I started with the New York session when I first started trading. So we're going to talk through both today. It might be a slightly longer video, but tune in, strap up, and if you like this video guys, give it a like. If you got any questions, just send them in the comments below. So for the London session, we'll start there. Yesterday it wasn't a really bad session. It wasn't a really good session. It was more of a session where if you had the right idea and you executed on the trade, then you got rewarded for that, right? So having a look at price action here, you can see obviously there's all this accumulation, right? And in my Discord, I said to the guys, I said, you know, I'm waiting for a breakout on either side. When we break out on either side, then I'm going to look for a reversal. Now, we accumulated here. I think it's pretty obvious. We accumulate here, and another important factor too is if you mark out midnight open price, which is roughly about here, we accumulated at midnight open price, which sets up for a nice power of 3. So I mentioned a potential power of 3. We come up, look at this high here. We created two relative equal highs. Now, I didn't take this short trade. I didn't personally take this short trade. Why? Because we left two relative equal highs. Now, the thing that sometimes is, I guess, playing out in the market that you've got to keep in mind is the term called smart money divergence or smart money technique. So this is one of the only times where price doesn't necessarily need to take out a swing high or swing low, but it can still reverse. So what I mean by that is the NASDAQ made slightly lower highs here, whereas on ES it was making higher highs. So there's a little bit of SMT there, and we'll actually, you know, inside a macro here, 250 to 310, price then created this inversion fair value gap here. So I know some people on my Discord took this trade. So at this point I was live in the Discord talking through my thoughts, and I said, look, this could be an opportunity to go short. Me personally, I didn't take it. Even though there was SMT there, I wanted to see that high swept, right? And sometimes you'll want to see things happen and you'll miss out on trades. That's completely fine. It happens, right? So we had the inversion fair value gap here, accumulation, manipulation, distribution. We then sweep these levels of sell side liquidity. Now that there is like your low hanging fruit. That there's a really easy target, but if you want to hold on, you can take your liquidity point at this swing low, which is your Asian session liquidity. So again, looking at price action, just reviewing yesterday, like this is quite nice. SMT at the highs, accumulation, manipulation, distribution. There's an opportunity to go short from that fair value gap inversion, and if you wanted to, you could go short from this fair value gap here too, right? There's an order block here too. There's also another fair value gap here that you could use to push price lower. So realistically, there's multiple opportunities to enter this trade, but depending on your risk management and your style of trading, you might have had to let that trade run, which is what I did, right? I had to let it run. So I'm in the Discord talking through this, and the price kind of moves down. We push past this swing low, and then you might say, okay, well, why did we reverse here? Well, we'll talk about it. If we go back into replay mode and we go to a 15-minute chart, have a look. Now we see the power of 3, but on a bigger time frame and a bigger scale. So this is an important concept I mentioned to the Discord. The power of 3 is a fractal concept and a fractal kind of notion where we've got accumulation, manipulation, distribution, but we've also got accumulation now, manipulation to the downside, and distribution to these relative equal highs. So these were engineered liquidity points that you'd expect to be taken out later on. So this would also become the buy side liquidity once we've swept the Asian session lows and tapped into this 15-minute imbalance. So when you're looking at this, and I was talking to the Discord, and if you mark out this next macro, have a little bit of a look here, right? You've got 350 to 410, right? And again, this is another example of an accumulation macro. And I said to the Discord here, I wasn't going to leave the call after silver bullet, but I said, let's just see what price action does. Let's see the next, say, 10, 15 minutes if we get any reversal signs. Now, for the meantime, look at this. This bearish fair value gap here, right there, it's being respected, right? Yeah, we kind of close a bit above it, but ultimately it's being respected and price is moving lower. So what you're looking for is you're looking for a fair value gap that's once respected to be disrespected. Let's play this out. Right at this point, that now becomes an inversion fair value gap, and you might say, well, isn't it too risky to enter straight away? Not really, because the macro's done something important, right? You've got clear liquidity to target, which are the equal highs here. You've got a clear power of 3 in a larger time frame. and you've just kind of, recognize that the macros occurred and there could be some kind of reversal happening as a result. You also have a market structure shift here as well above this swing high, and to make it even better, you've got a breaker block. Now, price doesn't need to return to these things. It's important. So something to kind of go over here would be this, right? Let's say you want to get a breaker block and your setup looks like this. You raise some liquidity, you have a shift, and you want price to return into this last up close candle as like a breaker block, right? Similar to this candle here. You don't have to have it return all the time. It's similar to like an inversion fair value gap. So price comes up here, it could return to this inversion. It doesn't have to though. It could just keep going up. So as soon as price closes above this up close candle, you can enter off a breaker and enter off an inversion fair value gap and market structure shift. You've also got, and I'm going to write this in the chart too, these consecutive candles here. When we break the opening price of these candles, that indicates what a lot of people call a change in the state of delivery, or a CISD. That just is like an indication or like a bit of an inkling that price might want to move up again, right? So we've got the macro, we've got a nice accumulation macro there, which we'll be talking about more in the future. We've also got the fact that we've got equal highs here. We've swept Asian sell side, we've tapped into a 15-minute imbalance, and now we're getting reversal signs or reversal patterns. So your entry could come right from here, right? Do we return back into that inversion? We don't. So if you're waiting for returns, you miss that opportunity. But if you like to use fair value gaps, there's your opportunity to go long. Now your question might be, well, okay, if I go long from this busy, where does my stop loss go? It's a great question, right? So looking at this, there's two ways to do this. Number one, you go for a long position right here. You stop below that low. Where do you target? At minimum, this level, which is a liquidity void, which I mentioned in the call. So that liquidity void here is important. Why is that liquidity void important? Because if you go for a larger time frame and you have a look at the Fibonacci from this swing high to this swing low, and you mark out, right, you mark out the 0.5 level here, it rests just above the 0.5. So anything above 0.5, there's a good opportunity to take partials, to take profits, or to scale out, right? So that's what I saw, and ultimately, if you entered from this bullish gap, you could still do a similar thing, right? And if we tap back down into this inversion, obviously you could go for a breaker entry or a unicorn entry. Like, we're not always going to return to things. If we're in a hurry, right, price might just continue up, and we've got equal highs here, remember. So we do stagnate a little bit, right? Price kind of stagnates a little bit here, but ultimately we push up from this 1 minute fair value gap. So again, you don't really get an opportunity to, you don't get an opportunity if you're waiting for price to return, or if you waited for price to return here, and sometimes that's what happens. So that's what I mentioned, like yesterday, it wasn't bad price action, but it was one of those things where you had to execute straight away. You weren't waiting for those extra confirmations a lot of the time. You had to look at your previous analysis, execute as soon as something was formed, and then ride that trade to the next level of buy side or sell side liquidity. So not a bad trading day. Really nice in terms of swinging into price action. Like, we take out sell side, we take out buy side, we take out sell side, we take out buy side. Kind of seek and destroy it, but with really large ranges, which makes it kind of easier to trade, especially if people are new to the market. So that kind of shows you the analysis there. And at this point, the equal highs are kind of the drawn liquidity. Now, mind you, where's the next macro? The next macro is from 450 to 510. That's the last macro for the London Open session. So again, what your price does as well, if we draw this out, this is a previous CIBI. It becomes down inversion fair value gap. It's just interesting that price accumulates there. It's something to keep in mind. It's a price signature that you got to look out for. And then ultimately, what happens during this macro? Well, guess what? We sweep this buy side liquidity. And the interesting part about this is the market continues to swing. We sweep that buy side liquidity. We sweep those relative equal highs or equal highs. We then create this inversion fair value gap here, right? And there is another opportunity to go short. Very rangy day, but large ranges. And then you can target these swing lows here. Accumulation, right? So if you're looking at like a market maker buy model, sell model, there's all these concepts that come into play. And ultimately, like this price moves quite well. It moves quite well. It stagnates a little bit here. So notice like we have accumulation here, we have accumulation here. We've got the buy side of the curve and then the sell side of the curve. Where accumulation happens on this side, we have accumulation on that side. And then what happens with price? Right? We continue to sell off. And then what happens is actually we do take out eventually this level of sell-side liquidity later on in the session, and then we react from that. So London session was pretty nice. It was pretty nice. Plenty of opportunity there, like just after the London Open session, going short, going long, and this does not require any daily time frame. This does not require, looking at, a larger time frame chart to take this analysis. It's based off macros and it's based off liquidity that's nearby. So when you're scalping the market or when you're taking these intraday trades, you're looking at how price reacts, and the 15-minute chart tells you a lot. It tells you a lot. Time-based liquidity, Asian highs, Asian lows, tells you a lot. And this is just one of those things to keep in mind. So that there is obviously our London session. Let's get into now the New York session for those that trade the New York session. And we'll talk through it, right? We just obviously opened up for the next day, but we'll talk through the session. Cool. So notice here, right? And here's the interesting part. In the New York AM session, we're kind of doing this with price. Now, these swing highs here, these buy side liquidity points, they look a little bit suspicious to me. So you could take shorts, and we'll talk about how you could manage that, but then you could also take longs at the same time. We'll talk about two different ways to see the market here. So I'm going to go back to replay mode, just go back to roughly about this point in time. And again, if I was trading the New York session, I'd still look at the 15-minute chart just to see if there's any imbalances nearby that price could kind of react from or reach from. And if we don't react from these imbalances, then guess what? It's called a breakaway gap, and it just indicates price is a bit more bullish or a bit more bearish, right? So that there's your 15-minute busy. Let's go back to the 1-minute time frame, and let's just see what price does and how it reacts in this zone, right? That's just an important thing to consider, right? Let's have a look, and we'll talk about it. So a lot of people here would be like, okay, we're in a macro. I think we're in a macro coming up. We've got an inversion fair value gap right here, and you could enter for a short position, right? You could, right? Which is fair enough. So you could go for a short position like this. As we retrace back up, your stop goes above that high. Where would your first partial be? It has to be at this low, in my opinion. It has to be. Why? Because there's a 15-minute imbalance here. So you might have got a 1 to 1.25 or 1 to 1.3, and then let's look at what price action does. You would have probably gone to break even, and you would have been almost stopped at break even, I think. Let's have a look. So price kind of plays out. Now you stopped at break even. Cool. So now at this point, you've taken one partial, you've taken something from the markets, and now you wait to see what price action does. You have a look at price action and you realize, wait a sec, we've generated these 3 highs here, and let's see what price action does in the next couple minutes. These look super clean. This is like an example of low resistance liquidity too. Now, again, this is why I mark out imbalances in the 15-minute time frame, because if we have a look at what price action's done here, we've swept sell side liquidity, right? So we've swept sell side liquidity right there. And when have we done that? I'll just put this in the bottom. We've done that from between 9:30 to 10 o'clock. Sometimes 9:30 to 10 o'clock can be a Judas swing, which you've got to keep in mind. So taking a short from here, from this inversion, or, mind you, taking a short from here, potentially from consequent encroachment of that fair value gap, stop above that high, take profit, at this swing low, it's not a bad trade. It's still an okay trade. That's the thing. Like, there's nothing wrong with taking a partial and then being stopped at break even. That's completely fine. A lot of the time, it's going to happen. It happens to me. It happens to you. It happens to everyone. So looking at price action here, and it's like, okay, well, we've already swept this low. We've pushed up quite a bit. We've formed this 15-minute imbalance. The bodies of these candles are closing outside of that. We're generating this buy side liquidity on the upside here. Maybe this could be a draw, but let's just wait to the next macro to see if there's any trades to take that could trade towards these buy side liquidity points. So again, we tap back into this fair value gap, but have a look at where the bodies are kind of resting. Look at this. Where are the bodies resting? They're struggling to kind of dig down. So it's using this 15-minute imbalance as some kind of support is the way to see it. Now there is like a little inversion fair value gap here, right? If you like to use inversions, potentially that could be a play. And then we'll wait for the macro, which starts at 10.50, and we'll see what price action does at the start of this macro, right? So again, you can enter trades during the macro, just before the macro, anticipating that something happens. You can see we run for liquidity, and this would be a pre-macro execution. So again, you've got an inversion fair value gap here. If you don't like inversions, then you can use this bullish fair value gap, right? So you got your busy. And you might say, well, what are the confluences that lead you to entering this trade? Well, number one, we've swept sell side. We've tapped into a 15-minute imbalance. We've come up again. We've tried again, but we've used this candle as a rejection block. It's a candle with a really long wick. You measure out the wick, right? This candle's wick like this. And price just barely taps onto the 0.5 level. The bodies are not even closing at the 0.25. So that indicates extremely bullish price action. Considering now that we've got these three highs here, buy side liquidity points that engineer liquidity, you'd expect at least one of those to get taken out. So if you were phrasing a trade, for example, like a long position here, you could enter as we return back into this inversion and fair value gap here, or just right away here, put your stop below this low. That low should be protected because it also swept these equal lows like that. Right, there's your stop loss, your TP, TP1, TP2, TP3, or you hold for a 1 to 2, depending on what your risk management is. At this swing high, it'd be a break even for sure, like you'd move it to break even, and then ultimately look what happens to price action. We just move up. We move up, we move up, we move up, and that happens during the macro. So macros can be used, and I'll be talking more about this in depth in the course release in the future, right? That's something to look out for, but you can execute before a macro, during the macro, or after the macro. This is pre-macro, and there's different price signatures that you're looking for to take advantage of that, right? So this is a reversal macro, by the way. This is a reversal macro. Now, price during the lunch hour doesn't do too much. It's quite choppy, right? So if I just speed this up, we'll go 10x here, and we'll have a look at price action. All the way up until, roughly about 2 o'clock, it doesn't really do too much. Now, what are you engineering here on the buy side? What's that? If I get the candle heights, I reckon they're exactly the same height. So this candle here, the high of that candle is 18263.75. The high of this candle is 18263.75. And this candle, 18263.75. It's too clean. It's too smooth. So if you trade after the lunch hour, you could target those equal highs. So for example, a trade could be, a rate of sell side liquidity. If you're trading the PM session, a rate of sell side liquidity. There's a macro here from 1250 to 110. You could wait for a retracement back down, right, into a fair value gap, which let's have a look here. Right, let's go maybe about here. And let's have a look on different time frames to see any imbalances that might exist, right? And I know some people don't have access to higher time frames, but it's just important to keep in mind. There's a 3-minute imbalance right here. That there would be a really nice entry, right? Obviously, this is all hindsight, but I'm taking you through the process that you could use in replay mode just to show you what you could do. So, rate of sell side liquidity, a market structure shift above this swing high here, which is perfect. Market structure shift and also another market structure shift there. It doesn't really matter what you mark out. It just shows you that the price is shifting, right? Bullish fair value gap here, which is fine. Long position, set a limit order here. Stop loss below one of these swing lows, and you target those equal highs. That's what you do, right? That would be a trade that you could take advantage of, right? Now, we do tap in once again. And for those that like turtle soups, that there's a turtle soup because you still have the objective of equal highs, and you've taken liquidity or taken sell side within an imbalance. That's the beauty of a turtle soup within the imbalance. So you could enter again here if you missed it, or if you're kind of waiting for more confirmations. And what does price do? Sweeps those highs. Now let's look at what happens once we sweep those highs. We sell off, right? So again, this is engineered buy side liquidity. So there's two ways to trade. You can trade towards liquidity. So if you're in the PM session, you can take a long position from here. There's other confluences too, like if we grab this low to this high, this fair value gap on the 3-minute is below equilibrium, which makes it a good buying price. Once we sweep equal highs, what happens? Price then reacts to the downside. We then use this CB to move lower. Accumulation, expansion. That's not a bad thing to see. In an inversion fair value gap or around a CB, accumulation and expansion. And just so you guys can see what that looks like on a very small time frame, have a look at this. accumulation, expansion. Mind you, right? 1, 2, 3 drives pattern. 1, 2, 3 to take out that buy side liquidity, and then we sell off. So I had someone in my Discord ask me about this, and maybe you also watch the YouTube channel, which is fine, but that is an okay position here to take, right? Placing your stop loss above that swing high, or at least taking one position and scale in. And if you're only with one contract, it is what it is, or one mini, one micro, whatever you're using, right? Where would you take your profits? Well, for me, that is your low-hanging fruit. That there is your 1 to 2. So whatever you need is sufficient, and it's quite quick. It's quite quick. Macro, right, comes up, and ultimately we just sell off, right? We just sell off. Look at the reaction after we tap into that 15-minute imbalance. We react off it initially. Look at that. And then obviously we enter the PM session, the late PM session. So here, was there any opportunity maybe to take advantage of? Potentially maybe you took an inversion play here around this time frame, but that was quite choppy. So I think the best play is honestly a short position from here for one partial, maybe a long position to these engineered highs, a long position to these equal highs, and a short position here. So bit of longer video, bit of hindsight, but it's just to show you there's always opportunities in the market. So it doesn't matter if you took a short or a long, or a short or long. It doesn't matter. There's going to be opportunities on both sides of the market, and this does not require having a daily bias. It does not. So it doesn't matter if you trade the London session like I showed you, or the New York session. There's always opportunities. Again, if you guys are interested in the Discord, I'm running a 50% off discount. That should work, right? So that link will be in the description to this video. If you like this video, give it a like. If you've got any comments, just put them in the chat below. But until next time, guys, I'll talk to you then. Peace.